All right, when I'm unmuted, you guys should be able to hear me. All right, if you can hear me, type in how you think I felt in the last week. Oh, my goodness. Well, you guys are typing something in, so Bill, you hit that one on the head. We'll keep that just between us. Forever, you guys have been hearing me say, oh, it's just a bad flu. And man, this is such a bad flu. It makes you wish you had died. But what a bummer. Poor Kiev. I think Kiev was more than a senior managing partner over the last week and something like that. Blah. Yes, definitely. The cat beat the crap out of me and came in. In fact, just to give you my understanding of how this is and how it felt. Well, let's just put it this way. I don't know how to say it. Every part of your body aches. And for me, I was feeling, I almost want to call them hot flashes, right? I was going to go, Kevin, you don't understand those. It's like my head would start to get hot and my teeth would hurt. And I was like, oh, I'm definitely coming on with a fever. But it wouldn't be, I wouldn't have a fever at all. And then the pounding headaches just start. And you're like, oh, take me today. And it was absolutely brutal. You guys will learn this about me. I can go through a car going at least 85 miles an hour, rolling at 2 football fields long. I can beat up my body hiking through the mountains, river rafting, what have you. You give me a little cold, a little sniffle, and I curl up into a ball like a little baby, and I'm just I don't know. My kryptonite is a cold. A cold, and I'm just toast. But yes, I made it. I only got a little cough. I tell you, I feel pretty weak. I'm looking forward to just resting for a week before I go hit the road again. But I'm glad I'm here. So let's get this started, and let's see if I can't help understand a little bit about where our market's at today. Gotta get this recording though. All right, welcome everyone. Welcome to the trade findings and adjustments for Thursday, the 8th of whatever we're in, April. I am glad to be recovering from COVID. It's going through our family. I'm going to hide out in my bedroom for the next 7 or 8 or 9 days till I jump on a plane and head back east. Big thanks again to Keith Bybee. He's now called the most senior partner. But he's basically called the most senior partner because, man, I fell off the face of the earth. That's the best way to say it. I literally just fell off the face of the earth. COVID is real. COVID kicks your butt. And I swear it makes you feel like you want to die. Oh, it is absolutely awful. For me, I'm a bit of a wimp. When it comes to it, I lose my stomach. So I just went on the 8-day COVID diet. Started eating some real food again yesterday. So I'll apologize to Kohler and Bosserman and Mormon out there that if it looks like I'm really eating a lot, I'm trying to put on my fat weight that I lost here over the last 8 days. You could lose like 22 pounds pretty quickly is all I'm going to say. So the comment is, well, why do we trade the way that we do? And the honest answer is going to come in a bunch of different ways. We collar trade, right, to be allowed to be wrong. We can be wrong. I can do all the calculations in the world, but it doesn't mean that the stock market or the stock will move in the time period that I want it to move. And we're going to go over against Archegos here in just a bit. But this is one of the things that we do. We collar so we're allowed to be wrong, yet we can still be right down the road when the numbers actually, well, for me, the numbers always make sense. What am I trying to say here? So that when when everyone else understands the numbers that we've done our research on. We collar trade so we can pick up more shares. I love dollar cost averaging without having to ask for more money. I mean, I've got a bunch of little keywords here, buzzwords, but how cool is it to someone dollar cost average for you without asking you for more money? We collar trade to go on vacation, play, and to catch COVID. It's not day trading. It's not something technically that you have to see and be in front of every single day. It works better if you're up early running your calculations, but in real life, it's something that gives you some time to get over a sickness, some time to go on a vacation with your family, some time to not have to worry about your positions every single day. For me, it's security. Every penny I have in the stock market is still important to me. Every time I have in the stock market, it will piss me off to no end to lose. For me, collar trading is security. It's security that I won't ever wake up and lose half of a portfolio overnight. Now, it doesn't mean that you don't have your portfolio go through market swings. Like we have this this oops from Archegos, right? Oh, let's put this into perspective one more time. A $10 billion hedge fund is responsible for leveraging probably 4 to 1. So leveraging their 10 billion to 40 billion. And then as we had some things falling, which is probably some other billionaire stick it to someone, right? Abraham, I'll get to your question. But all of a sudden, Archegos has taken out, leveraged themselves, and they had something like, there are quite a few, but something like Viacom and BIDU and a bunch of these other a bunch of these other positions lose ridiculous amounts of its value, meaning 20% or so, right? Well, 20% loss in a position when it's leveraged 4 times could be an 80% loss, right? When you're borrowing the money. Now understand, some of these big hedge funds have the ability to change or adjust their performance by going out and borrowing money. This is where margin gets that bad rap, right? I'm not big enough. I can't do it yet. I'm not sure I'd ever would do it, but there are some companies that, to make their returns look better, go and borrow billions of dollars, place new trades for gains and profits, book it, return the money, and say that it's a growth in the fund. I wish Hurley Investments was that big to be able to do some of that, but it's not right. It's not fair. So pretty boogering here. Let's just put it that way. Credit Suisse has a $4.7 billion write-down, where they're going to get most of that back. It looks like they're going to take a loss, though, of about $1 billion. So they liquidated, they're selling, they're recouping their money of that 4.7. They're going to lose $1 billion, probably $1.5 billion when it's all said and done. And there's a bunch of them out there. It's going to be not just Credit Suisse, but all the people that were lending Archegos some money are going to take a hit. Some of them, like Goldman Sachs, did a better job managing it. Morgan Stanley actually sold off some of their stuff before everyone else. So they're going to take just a very small hit. But pretty interesting that yet again we have one of these high-flying funds that for 20 years had some ridiculous bullshit return, and now they're out of business, all going out of business. I wish there was some way to pull their returns out of the averages, but it's not. It's just, again, there's a lot of smoke and mirrors when it comes to the true financial markets. And this is one that that eventually, if Hurley Investments does become a true hedge fund one day, we're not going to be an Archegos. We're not going to be a Bradford. All these jokers that are out there that falsify their results. There's certain things you can do that's your fiduciary responsibility to honor that versus doing the garbage that you see these guys doing. We're going to collar trade. We're going to collar trade because collar trading gives us the advantage or odds in our favor. But that's only if you understand that it's a process. It's not a one and done. Abraham asked the question, how much would you consider weigh on fundamentals, technicals, and general market conditions for collaring? That all plays a part in it, Abraham. In fact, most importantly, fundamentals are the most important. Because if you keep being wrong on collar trades and fundamentally a stock doesn't come back, then you've thrown a lot of good money at bad. With that said, I've learned that if you were wrong and it just keeps going down, all you have to do somewhere along that just going down before it goes out of business line is add a second insurance contract onto that stock, and you should become profitable. But the main question, let me see if I can rephrase this. If you're not doing fundamentals, technicals, and general market sentiment, if you're not putting the time and the effort in to do all those things that other people don't do, you're never going to truly be successful. Keeve and I have a group that we know of. They trade all these millions of dollars. They've got these meetings. They've got this trader. And when it comes down to it, we're like, hey, show us these returns. Let us see what you got. And we were shown an Excel spreadsheet. And Keeve and I sat there and like, that tells you all you need to know right now, that there could be as much as a $58 million to a $77 million to a $90 million company out there that also isn't being honest with where they're at and what they're doing. It's kind of a booger. In all honesty, the most important thing that you can do when you're managing money, whether it's your own, your wife's, your family's, other people's, is communication and protecting that nest egg. A lot of what we do, and Keeve's on the verge of picking up some ridiculously big money, it's going to come about not because of some returns that we did for someone else. It's going to come about because we give you guys this opportunity to touch us, talk to us, to voice your concerns. We're still not so big that people can't give us a call and we can't pick up the phone. We're still smart enough to listen to what people are trying to do, to help people get to where they want to get to. We don't just pile everything into, everyone into one group of stocks or whatever. We have different breakpoints for different size portfolios. And we really just do the best we can to make you guys as much money as possible, as safely as possible. And safety has never been diversification. I'm going to giggle. I still can't believe people throwing a bunch of spaghetti on the wall think that that's going to save them. There has never been a market crash ever in the history of the United States, at least, that diversification saves someone's portfolio by more than maybe 1 or 2% max. When market crashes occur, everything goes down. You can't hedge metals against inflation, against oil, against stocks, against commodities. A market crash has everything coming down. And the diversification isn't the all it is throwing a whole bunch of stuff into a lot of things so that some go down, some come up. On a daily basis in the stock market, yeah, that's kind of nice. But on a market crash that occurs every 4.4 years or more, it's difficult. It's very difficult. All right. We're looking good today. We've looked good this week. Let's face it, we are in the last innings of I got some dogs going off. My kid's probably bugging them. We are in the last innings of a historic bull run. And the neat thing is, with all this extra stimulus, we probably still have our bull run extended now. Someone asked me, well, how long has it been extended? And it's pretty easy to see it's been extended by at least $2 trillion and maybe $4 trillion. But Kevin, I asked you, how long has it been extended? Well, it's been extended by $2 trillion and maybe $4 trillion. We don't know how long our bull market has been extended. We know the dollar figure that's being used to extend the bull market, but we don't know how long. More importantly, I think we're going to find out just how much a 7% increase in taxes, which is really increasing taxes by 33%, but we're going to see how that affects businesses. How that's going to affect small businesses. They've already been beat to hell through COVID. And now small businesses are going to get higher taxes as well. We don't know how much stimulus will increase the bull market as a time frame. We only understand how much it's going to affect the money that's been put into the ability to put a Band-Aid on the major problems that we have. Abraham, you're exactly right there. Abraham actually just made the comment. Number one, in collar trading, the probability of failure degree, and the often overlooked. So yes, the ability to better hedge your risk in collar trading is significantly better with collar trading. And your impact of the portfolio with such failures of not having things move when you want them to, a lot less impact on your overall portfolio when you have it protected and you're actually earning something while you wait for those numbers to justify themselves. All right, so earnings comes up next week. Banks come up next week and the week after. Then on the end of April, we start hitting our big earnings for the 4 weeks into May. So you're going to see us have some protection going forward. Rolling protection up. Something else we do for collar trading, which is pretty neat. We collar trade to protect profits. Not saying we do a great job all the time, but boy, I am so glad we protected the way we did on BIDU. Wow. What a great way to add 40–60% more shares of stock. I love what we were able to do for BIDU. You know why I like collar trading? We collar trade so we don't day trade. Think of all those poor fetchers who are just picking, a group of stocks, a fund, have it crap out on them, have them lose all this money, then pull it out of a loss and go to something else. Boy, we showed it the other day, and I'll look through it again. He was trying to go through the wash sale rule. And it's not like someone that is day trading can end up with a $500,000 profit when he only made $50,000. But the government will see it as a $500,000 profit, and all he has to do is go through and explain he was day trading and that he really didn't make that much, right? He had losses in there that you have to go back and show. But boy, if you're going to day trade, you're going to cause a fight with the IRS. And that's not something I would ever want to do. I'm not looking to ever have a fight with the IRS. I'm looking to make sure they're my friend, not my enemy. So again, I made it last Thursday night. Let's just say it hit the fan, but I'm up and moving. I'm back. I'm going to take a week and kind of recover. And I'm glad that we collar trade so that, one, I don't throw too much work on Keeve. Two, so that when it hits you out of the blue, you don't have to be doing things every single day. And three, that security or peace of mind that you protected yourself to the way down. Oh, nothing better when you're worried about your money that you have placed in the stock market that you're going to be using for retirement and growth and kids and all that kind of stuff. Any questions you guys have for me today? Keeve, anything that you think I should be going over that maybe I've missed in the last week? Jim Schaffner, thank you for the text and the messages on getting better. Bill Brandner, thank you. Jim Kohler, Jim Bosserman, Rich Mormon, thank all you guys for letting me know all the different stuff I could take. Hydroxychloroquine or whatever is not readily available out here. Waiting for you guys to type anything in. If you guys don't have any questions, I will get back to you. So I'm not clear to fly yet, Jim. I need to go take a COVID test today. And then I guess I need to take one next Friday before I take off on Saturday. So right now, I'll get back to you this afternoon. This afternoon from 2 to 7 o'clock my time, I can go grab a rapid test and I've got to pass that one to be able to get on the plane. But feeling tons better. I feel I should be able to pass that one after a week here. And then from there, I've got to pass the one next Friday before I leave on Saturday. So fingers are crossed. And I'll call you this afternoon to hopefully give you a positive heads up and 2 thumbs up. Are there any other questions you guys have? All right. Hey, I appreciate you guys being with us today. Hopefully this has been helpful for you. Appreciate it, Abraham. Thank you. I'm trying to have the best recovery I can. Wow, does this garbage kick your butt is all I'm going to say. Never felt like I'd need a week to recover from a cold. But again, I never thought I'd be as wimpy as I am when it comes to colds in the first place. Keeve, I haven't seen you type anything in. Is there anything that you want me to go over that I might have missed? Or something maybe I could just wait till next week, Keeve? I don't know where you're sending me anything. All right, guys. Hey, appreciate your time. Have a good day. Hopefully I'll be back to full speed next Monday and we'll go from there. You guys take care. Earnings season comes up and we'll hopefully knock it out of the park this earnings season. In fact, out of all the comments about earnings season, here's what's going to matter most. It won't necessarily be about their numbers. It's going to be about their guidance. The stock market's going to want to see a reopening. They're going to want to see guidance that's above and beyond expectations. That's what's going to move our markets higher going into summer. The expectation of reopening. It's going to suck if our numbers spike again. Oh, this is going to be an ugly year. It'll be a down year in the stock market. We'll lose everything we already have. In fact, our market's already gone up too fast, too quickly, too fast. But guidance will rule this earnings season, and we want to see the growth. We want to see the growth potential to see companies coming back. That's what will move our stock higher at the beginning of the summer. All right, guys, take care. Have a good one, and I'll see you next Monday. Bye-bye.